Hello everybody, this is Harry Swaminathan from optiontiger.com. Welcome to the free course library. In this free course, we're going to study about the MACD indicator. The MACD indicator is, the MACD itself stands for Moving Average Convergence Divergence. So basically, as the name suggests, you're looking at a couple of different moving averages, and the insight you're trying to glean from it is how should you look at when these moving averages either converge towards each other or diverge from each other. So it uses a fast signal and a slow moving average. So, I mean, it uses a fast moving average and a slow moving average, and then there is a signal line as well. So, we'll look at all of these on the Thinkorswim platform and how the chart works. But in general, the MACD indicator is better suited for longer term swing trade types. So if you're in a day trading cycle, I don't think the MACD indicator will work very well. That's because the fast and slow moving averages, it uses the 26 period and the 12 period, and the signal is a 9 period, I believe. We'll take a look at all those three signals, and so those are it's too long for a day trading type of environment. So sometimes you'll find that the MACD indicator actually is a little slow to develop, and that's the reason why, because it uses a 26-day period for the slow, it uses the 12-day for the fast, and then it uses the 9 period for the signal. So it's more useful in longer term swing trades. Now the MACD is a momentum indicator. So as a stock is moving either up or down, it follows at least most of the time it follows some kind of a pattern. So initially the stock starts to gain momentum. So when it's gaining momentum, it's actually, whether it is up or down, there is a phase when it gains momentum. Then it starts peaking out. So which means the momentum starts to go out, and then the momentum actually starts falling. This aspect is one of the most important features of the MACD indicator itself, and the way you read it is through the histogram structure. So the histogram structure has some important insights, and so when we go in, we'll take a look at that. So MACD is a momentum indicator. You want to use it to continue to stay in the trade, and then when the MACD actually starts peaking out or even changing its momentum, that's when you want to try to get out of the trade. So important, as always, with all technical analysis and all technical patterns, they are always trumped by fundamental news and events. So if a company is having a lawsuit, if a merger or acquisition is going on, or there's some global geopolitical event, all of those will always trump technical patterns. Having said that, let's jump into the Thinkorswim platform and look at the MACD indicator in action. So here we are looking at the Netflix 6-month daily chart. What we have here is the MACD indicator itself. You can see the parameters of the MACD are the 12 period, the 26 period, and the 9 period. So you don't want to change any of these to the MACD because the MACD is a fairly involved mathematical calculation. So you want to let everything be as is. And if we look at the charts, the MACD can work slightly differently each time, and so you really need to know what is the important piece of information that you need to take out of the MACD. Okay, so sometimes you'll see MACD give you a very early indicator, like here. If you see this, it's telling you. So here, let's just look at this graph first. First of all, we have a fast period, which is the blue line, the slow period, which is the yellow line. Now the difference between these two lines is what tells you the momentum. So for example, the distance between the two fast and the slow is telling you that at this point, for example, now we're looking at the histogram, and when you see these darker green lines, it's telling you that the momentum is strong and it's increasing, because you can see that the histogram bars are getting bigger. Then from here onwards, the histogram bars are actually reducing. So it's telling you that the momentum is decreasing. And there's a temporary boost over here on these two bars. However, the momentum is on a downward slide. And obviously, if the histogram is in green, you're in an uptrend. If the histogram is in the red, you're in a downtrend. But after it enters the red, again you can see these dark, bright red histogram bars, and then you see the little bit of a dip here. However, it starts increasing again. So the momentum is increasing as long as the histogram bars are increasing in size. And when they stop increasing in size, in fact when they start decreasing in size, that's when it's losing momentum. And obviously if it is if it crosses over, then it has lost its momentum. One of the other things also is if both the moving average lines is above the center line, so you're generally in a bullish trend there. But that's not the real important information, because that's anyway too late. You already know that you're in a bullish phase. The real important information is this momentum, and that is dictated by these bars on the histogram. So as long as the bars are increasing in size, you might have a dip every now and then on one bar. That's okay. So, and that's why this indicator is important to look over a few days, meaning your trade has to be a slightly longer term, perhaps a 2-month trade or a 4-month trade or a 6-month trade. The longer the term, the better the MACD is going to work for you. So certainly don't use it in day trading, certainly not to be used in even a weekly trade and things like that. It just doesn't give you useful information. However, once you go into a monthly, 2-monthly, 3-monthly and a 6-monthly trade, the MACD can really provide fantastic clues as to, okay, at least what is going to happen with the stock. So here you can see the momentum bars start slowing. The stock still goes up a little bit, but as you can see, it's sort of petering out. The big move is right here when these momentum bars are dark green and they're increasing in size. That is the time when the stock has the maximum momentum. After that, the momentum is petering out, and in fact, it tells you a bearish signal right here. It's a little premature actually, and you can see that the stock still continued up to about 475. So there are specific pieces of information that is useful from the MACD. Just because it turns around, and it crosses, it doesn't mean that the bearish phase is coming in or anything. I feel the most important information you can glean from the MACD is once you're already in a trade, how strong is that momentum in your trade. So obviously if you're in a bearish trade, you're best if you've caught the trade on this leg right here. Similarly, if you're in a bullish trend, it would be awesome to have a long call on this trend right here. So that's the kind of information that is very useful. And of course, as you can see, over a period of a number of days, it really works very well. Sometimes it gives you these crossovers, sometimes it gives you an early signal, sometimes it's later. So it's not very consistent. So I would not say that is the important aspect of the MACD. Certainly the important aspect is to judge the momentum, which you judge from the histogram bars and the histogram bar sizes. So that's it for the MACD. If you have any questions, please send us an email at info@optiontiger.com. Thank you.